Hi, everyone. Thank you for joining us this evening for our webinar for Uptown at Cole Park. My name is Alin Hong. I'm one of the sponsors, and I will be guiding you along as we review the property, business plan, investor returns, and a whole lot more. Now, before we kick this off, we want to mention that this is a 506B offering. This is intended to be reviewed by invite only. This webinar has been prepared to provide summary financials and physical information to you, the investor. It is based part in information received by the broker, the seller, and other market information. We believe these sources are reliable. We make no representation to its warranty or accuracy, and we highly recommend that you consult with your tax, legal, or other advisors before making the investment decision. All right, with that said, let's jump right in, shall we? Okay, so Uptown at Cole Park is a luxury mid-rise legacy-type property in Dallas, Texas. It's built in 2016. This 179-unit institutional-grade A-class asset boasts an unparalleled location in the desirable Uptown submarket on Major Highway US 75. You guys, this is truly irreplaceable real estate. Now, so many people have been asking us about this property, and we'd like to share the backstory on how we even came across this particularly special property. Now, many of you may know my partner in business and in life, Kenneth Lee. Now, Kenneth, you guys, was actually one of the very first tenants of Uptown at Cole Park back in 2016. So what had happened was, as he successfully expanded his medical business to DFW, Kenny selected this property as corporate housing, and he and his team have stayed there for the last 5 years. Moreover, on top of that, it is where we both fell in love, and as you can imagine, this property is sentimental for us, and we are thrilled to share our investment opportunity with you all. So yes, you guys can kind of say that Kenny's been spending the last 5 years vetting Uptown at Cole Park for us and our investors. Speaking of vetting, here's our agenda for tonight. We'll introduce you to our sponsor team, who are our dear friends, and share why this deal is so compelling. We'll review the offering summary, market, location, demographics, property overview, and how this property was able to perform well even during the pandemic. We'll touch on the business plan, rental comps and submarket, financial projections, investment summary, cost segregation, and bonus depreciation, and then we'll close it out with sharing how you can invest in this deal. And with that said, I'd like to introduce you all to our sponsor team. First in my heart is Dr. Kenneth Lee. He's a medical doctor specializing in neuroradiology and interventional pain. Hi, Kenny.
Hi. Thank you, my love, and my better half. A little bit about myself. I'm a medical doctor. Started practice in Houston about 10 so years ago. And about 5 years ago, we expanded our pain orthopedic practices and surgical facilities into Dallas. And as Alin said, that's where we use Uptown Cole Park as our corporate apartment, and we still do maintain a unit there. If I may quickly give a brief introduction of this amazing woman you've been listening to, Ms. Alin Huang. She's an Emmy Award-winning journalist. She has worked with NBC, the White House, Entertainment News, and now she's working with us.
All right, next up, okay, if you guys ever see this man in person, you got to make sure to get his autograph, because aside from having more than a decade of multifamily investing experience, Alan Stewart is a best-selling author. And also, a fun fact as well, Alan Stewart was born and raised in DFW, so he knows this market like the back of his hand, right, Alan?
Thanks, Lynn. It's great to be here with everybody tonight. So as Lynn mentioned, I've been doing multifamily for almost a decade. In that period of time, I've been involved with 5 transactions as a general partner. 4 of those have gone full life cycle. I also, going back in time, I went to Texas A&M, studied engineering. Right out of school, I went into management consulting, and I left as a managing partner running the Greater Texas portfolio for several industry verticals. In that role, I managed projects and teams of very large size, up to over $100 million in size and scope.
All right, next up we have a power couple, Dr. Hua Nguyen and Dr. Jaime Gonzalez, who, on top of being full-time active investors in the multifamily space with more than $120 million in apartment acquisitions, they own successful multi-million-dollar optometry practices, and one of them being in walking distance to Uptown at Cole Park, right?
Yes, Celine. Our private practice is located very close to Uptown at Cole Park. It has been there for about 10 years. I'm actually from the DFW area, and I grew up very close to the particular property. Our demographic is professional, doctors, lawyers, nurses, and we have hospitals around this particular property. Seated right next to me is my beautiful, more talented partner, my wife, Hua Nguyen.
Uptown is one of the most desirable submarkets in the DFW area. We have seen the organic growth of this area and know our patients very well and the type of residents that live in this area. We personally come here, aside from working here, we personally come down here because of the desirable and the shopping and retail and restaurants around here. Lots of young professionals that live in this area.
All right, last and certainly not least is the apartment king himself, Brad Sumrock. Now, he's owned 34 apartment buildings totaling more than 6,200 units with more than $500 million in asset volume. And also, you guys, fun fact, Brad has a residence right around the corner from Uptown at Cole Park. Is that right, Brad?
That's right, Alana, and thank you for that introduction. Yeah, another thing about me is a GP. I've done over 25 transactions, and 16 of those have gone full cycle, returning over $35 million to investors, averaging a 125% total return. So I'm really excited to be part of this deal and go through the next few topics. So all the GPs not only have residences in Dallas, but as you can see, we already have 10 properties in Dallas that we're GPs in, and these range from the west side of Fort Worth to the east side of Dallas, and this totals over 2,200 units. So why are all of us on the team so excited about this offering? Well, number one, as you know, many of you are Sumrockers in this webinar, and there's a few things that I really like to point out here that I've been teaching that are timeless principles. And one is we always like to look at the experience of the sponsorship team. And as a sponsorship team, we have collectively invested and owned over 14,000 units. Number two is we love to look at the market and the sub-market. And, you know, having been a resident in the Uptown area since 2008, I can tell you that this absolutely is an A-class asset in a prime A location. The occupancy currently is 96%, and we're at 100% pre-leased. And it's a very affluent demographic. So these are some of the top drivers that are, again, timeless in apartment investing, and that's one of the things we're so excited about. And the rent growth in the submarket is outperforming not only the national average, but also the DFW average as well. And finally, it's just a very walkable live, work, and play type of environment that has extraordinary visibility, being adjacent to a highway that has over 400,000 vehicles per day, so it's a really easy place to find. And also, as a GP team, we have significant skin in the game with over $3 million of our own equity being invested into this property. Next, I'd like to share a little bit about the offering. So we're buying the deal with just over $46 million, and that's a $258,000 a door, and this is well below replacement cost, so that's something we're really excited about. We have a pretty, moderate CapEx budget of $900,000. That's over $4,000 a door that we're going to invest in the property. And by the way, during COVID has had a minimal impact on the property and on the submarket, and it's only going to perform better now that we're coming out of the pandemic. On the debt side, we have secured a bridge debt at 70%. Now, we were offered 75%. But we, as the GP team, made the decision to go with the 70% because it's actually lower risk and a lot easier to refinance, which is going to be part of our strategy potentially in that 3-year period. So when we move on to the deal structure, we anticipate a $15.5 million raise. Now, our holding period is going to be between a 5-year and a 10-year hold. Now, within the Sumrock Group, it's been our protocol to always compare apples to apples, showing every single deal as a 5-year hold. So our 5-year total return is over 100% projected, and that'll be available in the business plan for those who request that information. And we have also showed a 10-year projection as well, because that's also part of our strategy to hold between that 5 and 10-year period. The projected average annual returns are over 20%, and the projected average annual cash flow is over 5%. Our LP-GP splits are typical within the Sumrock Group, with an 80-20 split, a 2% asset management fee, and a minimum investment of $75,000. We are doing a Reg D 506B, which means that everybody that comes into a deal needs to have a pre-existing relationship with one of the sponsors.
Dallas-Fort Worth regional population is among the fastest growing in the country. It has grown 17% from 2010 to 2018, with a total population of more than 7.5 million people. It is one of the top 5 metros in the country. Just in 2020, more than 20,000 new job opportunities have come into the DFW Metroplex. You can see on the chart here the top 25 Dallas-Fort Worth relocations and expansions. And we have listed some of the top company and employers in this graph. The investment highlights for this project, it's 179 units, like Lynn had mentioned, and it's very walkable to restaurants, bars, entertainment venues, museums, and it's really close to the highways and quick connectivity to major financial employment areas. And relative to the other new buildings around here, it's a large discount in the rents. There's a high demand in this area with very limited for new supply to be in this highly desirable area. It is right off of the Central Expressway, extremely high visibility with over 400,000 vehicles per day. There's irreplaceable amenity-rich location near Uptown, Downtown, Knox, Henderson, and Highland Park. Very affluent residents and demographics that really provide a key foundation for future rent growth. In this chart here, you can see the location of Uptown and the major connectivity to the highways and other employment centers. We have the Platinum Corridor, Uptown Dallas, Downtown Dallas, Preston Center, UT Southwestern Medical District, and Baylor University Medical Center. And you can see the number of employees in these major employment centers. These graphs represent the submarket demographics. You can see the population, median household income, the median age, population. And one of the things I want to really point out is how educated this group is. About 60% of the residents in this submarket hold a bachelor's degree or higher. And the median age of the demographic here is about 33 to 34. Household income, on this chart, this was as of 2019. Within a 1 mile radius, it said 73,000. As of the most recent data, it's more close to about 83,000. And projected to be closer to 95,000 within the next 3 years.
Thank you, Hua. All right, now Jaime is going to review the property overview, and Kenny and I can say from personal experience, we really enjoyed our time here on this property.
Yes, they are fantastic. So Uptown at Cole Park is located just off McKinney Avenue, which is one of the major streets in Uptown. It's right in the heart of Uptown Dallas. Uptown at Cole Park, it's 179 units. It's a 6-story podium mid-rise with elevator access from underground garage leading to all the floors. One of the most important factors of the A-class asset is the amenities. In the next several slides, we will highlight some of the amenities located at Uptown at Cole Park. The fitness center is extensive and complementary. We will be adding a couple of pieces of exercise equipment, which will be highlighted in our CapEx plan. It has a beautiful resort-style pool, a separate resident, also the package lockers. We'll be upgrading the coffee bar. There is a separate room for residents to store their bikes. It is very walkable to Katy Trail, Cole Park, Knox Henderson, West Village, and a lot of restaurants and bars. It is very pet-friendly with the dog park and dog wash station. These are a few pictures of the amenities. On the top left picture is our reception area. The bottom left is our fitness center. And the right picture is the outdoor lounge. This is a beautiful picture of our resort-style pool. The interior amenities, we have beautiful quartz countertops, stainless steel appliances and custom cabinets, individual washer and dryers located in all units, private balconies with views of Uptown and downtown Dallas. And these are some of the pictures of the interior of the amenities. On the top left, that's the living room. Top right, washer and dryers in all the units. And the middle picture shows the stainless steel appliances with the custom cabinets.
Thank you, Jaime. All right, next up we have my love, Kenny. So Kenny's going to touch on how Uptown at Cole Park performed well in spite of a pandemic.
Thank you, baby. Uptown at Cole Park performed really well during COVID. There were minimal rent concessions offered, and occupancy remained well above 90% throughout this period. This really shows the resilience of this core Dallas submarket, where typical residents are medical and business professionals with above average income. Due diligence report for this property shows that this building is solid. However, we have worked in about $900,000 of CapEx for several key areas. We will implement a technology package and upgrade the common areas and courtyard amenities. Since the pandemic, many are working from home, so we will expand the business center to accommodate for the increased work-from-home demands. The fitness center is already very nice, but given frequent requests, we will consider adding a couple Peloton bikes. We will also spruce up the dog park with some turf and additional seatings. The exterior of the building definitely can use some cleaning up. We will power wash, touch up some paint, update landscaping, and some signage updates. We will also implement a water conservation program, which will save over $20,000 annually. So here are a few pictures of the common areas. The top picture is the beautiful lobby and the front desk. Part of the business center can be seen just left of the check-in desk. The bottom left picture is the state-of-the-art fitness center, and the bottom right is the second floor courtyard. You can see here the core Uptown location of this property and the various submarket properties that we use for our rent comparables. Uptown at Cole Park is a 2016 build with 179 units. The average size unit is 861 square feet. Market rent is $18.63 with rent per square feet at $2.17. The effective rent is $16.64 with rent per square feet at $1.93. So here, visual graphic comparison. We can see that Uptown at Cole Park's rent, as I reviewed earlier, shows that the rent is more than 10% below the average in this submarket. Hence, we have a lot of room for rent growth. Here's CoStar's review of this Uptown submarket. You can see that CoStar is extremely bullish in the next few years with greater than 10% annual rent growth. A big part of this is due to limited supply coming online and frankly little to no dirt left to build in this core area. We worked in 4% annual rent bumps for our assumptions. So here are our unit mix. You can see majority of our units are one bed, one bath, which is very appealing for this demographic. Here are the sales comparables for this submarket. We're acquiring Uptown at Cole Park for $258,000 per door, well below replacement cost. There are similar properties nearby that are under contract for over $275,000 per door. Thus, we feel really good about this property and this submarket.
Thank you, my love. All right, next, Alan is going to talk about what everyone wants to know. What is our business strategy, Alan?
Well, thanks, Lynn. Hey, I'm a numbers guy, so this is going to be fun. As Kenneth mentioned, we have a $900,000 capital improvement plan, which he walked through. And why that's important is when we look at this property, the current rents are a bit more than 10% below the current submarket. And why is that important? Well, every time that we look at a deal, that's really attractive because I can always get my head around, well, what does it take to take the current rents at the subject property, in this case Uptown at Cole Park, to the current submarket? Well, in this case, when it was built in 2015, 2016, the technology that was implemented at the time was a little bit dated. And so, we're going to implement that smart technology package that Kenneth mentioned, as well as increase the amenities to be at the level of the Uptown submarket. And so with that, that's going to be a big driver to help us burn off that loss to lease and get to the submarket rents. And we're really excited, as Kenneth mentioned, that CoStar is so bullish on the rental increases. So again, they're looking at over 10% increases, and we've modeled in more conservatively at 4%. So we feel that that's an achievable number. And then on the expense side, so we also mentioned that we were going to do a water and energy conservation program, which will, of course, drop to the bottom line with our NOI. And then taxes are always a hot topic here in the DFW area. So Cantrell McCulloch is the tax consultant that we normally use for properties, and it just so happens that they are already representing this property. And we were able to actually talk with the specific tax consultant representing the property today. The 2021 taxable value was final at this point, which is great because the taxable value is way lower than where we're purchasing it, so that's going to be a big benefit for us. And then looking forward, they estimate for 2022 to plan on 85% of the purchase price, and then in 2023 get to another 5% increase. And we've included all of those in our assumptions for the taxes. And then also in terms of distributions, so for this property, like most that we do, we are planning on doing quarterly distributions. And I'd like to talk about the debt. So our friends at Old Capital are helping us get a bridge loan for this property. It's going to be a non-recourse bridge loan, and I've had a long track record with Old Capital. This will actually be the fifth loan that they have done for me, and they've always done a great job. They shopped us, actually, I think, across 21 different lenders. And, as you can see here, we have 70% loan to cost. And as Brad mentioned, we actually could have taken 75%. The lender really likes this deal, but we decided to be more conservative and stick with the 70% because it'll be easier to refinance the loan, and it also just makes the overall risk for everybody in the deal less. Yeah, we got a great interest rate. Starting rate is 3.4%, so we feel really great about that. It's a 5-year loan. It's a 3-1-1, so that means there's the first 3 years and then with 2 1-year extensions. So the exit fee is only 0.5%, which we were able to negotiate down. And one of the things that we really like about this lender is they also do agency lending. And so they can actually take us out of this loan in-house easily. And if they do, they're going to actually waive that refinance fee, which we really are excited about because that's going to really decrease our overall cost of debt. All right, cost segregation, bonus depreciation, more numbers. I love it. So if you may or may not be aware, but there is some language in the tax laws that allows for bonus depreciation. It's something we get to enjoy in this year as well as next year. And so in the end, we've engaged with Engineered Tax Services that we've worked with before, and they're going to do the cost segregation study, and they have estimated that about $12 million of depreciation can be done on this property. So we're really excited about that because what that means for everybody is that about 77% of each investment can get that kind of level of depreciation every year. So that could be some excellent tax savings. Again, we're not tax advisors, but so get with your own tax advisor there, but we're really excited about these benefits. All right, let's talk about the exit assumptions and strategy. So as we mentioned, this is a legacy asset that we're really excited about. And so plan A is we're going to buy the property with the 3-year bridge loan that we talked about. We're going to refinance the deal into agency debt. And so at that time, with that refinance, it may allow the possibility to return a portion of investor capital. So that's plan A and plan B. And of course, we'll continually assess what the market will bear. That being said, when you're looking at this investment, you should certainly plan on a 5 to 10 year hold when making it. As I mentioned, it's a legacy asset. We're excited about having this in our portfolio. We're fully invested, and we're looking forward to having this be a great deal.
Thank you, Alan. All right, you guys, now to wrap everything up, I'd like to touch on our sponsor team's success track record. Now, collectively, as general partners, we have successfully led 19 properties to full cycle, yielding more than a 2.25 times equity multiple to our investors. And if you guys take a look at your screen, this is our investment timeline. Our subscription round opens tomorrow, and then once you complete your subscription agreement and are approved, you will have 3 business days to wire in your funds. And you guys, remember, this investment opportunity is rewarded on a first-come, first-served basis. Okay, so how to invest in this deal, we're going to break it down for you guys. So once you have submitted your investor interest form, we will email you your account and password for the investor portal tomorrow. And as soon as you get that, make sure that you log on to the investor portal and review and sign the documents via DocuSign. Now, once the sponsor team approves your investment, you will have, again, 3 business days to wire in your funds. Once we receive your funds, we will email you your confirmation, and then we can celebrate. All right, with that said, let's start our Q&A segment. We got a lot of questions from you guys, so we have our sponsor team here who will be answering all those questions. The first question we have is, when will distribution start, and how long after closing?
So this is Kenneth. Distribution will be quarterly, and we're looking for the first distribution to be a couple quarters after closing.
Perfect. And how much are the sponsors investing in this deal, Kenny?
You can see we're really excited about this, and the sponsorship team collectively are investing over $3 million in this deal.
So we're certainly putting our money where our mouth is, right? We truly believe in this property. And next question, are you guys doing a cost segregation study, and how much will it affect my investment?
Thanks, Ellen. This is Alan. I'll take that one. Yeah, as I mentioned, we are doing cost segregation studies. So Engineered Tax Services is doing that for us, and they're basically estimating that at about 77% of your investment in year 1 depreciation.
Okay, next question. When is the projected closing date? Coming up, right?
The projected closing date is late July. Things are moving on track.
Yeah, we're very excited about that. Okay, Jaime, people are asking, when do I have to wire funds in to invest in the deal?
So the investors will have 3 business days after subscription documents are accepted and signed off by the sponsors.
Gotcha. Okay, so here's a really important question that I'm glad that you guys asked. Which property management company will be managing the property, and do they have a presence in that submarket, and what is their record of success? Kenny can answer to this because he may or may not be best friends with the manager of this managing company, right, Kenny?
I don't know about best friend, but he's a very nice guy, and in fact, the Tipton Group has been the property management company in place since the beginning. They are a Class A property management company and manages over 14,000 units in the DFW area currently.
Yeah, and I joke around about him being best friends because, as we have shared, Kenny has lived there for 5 years, so the manager there is a very familiar, friendly face of ours. All right, so let's talk about fees. Jaime, can you take this? So is there an acquisition fee? What is the asset management fee?
We don't have an acquisition fee. There is a 2% asset management fee and a 1% refinance and disposition fee.
Okay, due diligence. Has due diligence been completed? In fact, yes, right, by a friend. Is that right, Jaime?
Yes, Brian Amos from Omni Group. We just received the full report and the property's in good condition.
Perfect. Okay, Alan, what is the projected interest rate percentage?
Thanks, Ellen. Yeah, it's As I mentioned, it's a bridge loan, and the starting interest rate is 3.4%, which we're really excited about.
All right, another great question that we received from you guys is who will be the asset managers and what experience do they have?
Sure, Lynn, I'll take that. This is Alan. So I will be the primary asset manager, and Hua and Jaime will be working alongside with me, as well as Kenneth and Alin.
Okay, next question. Has a thorough lease audit been performed?
Hi, this is Jaime. 100% of the lease audit has been performed, and it's all in good shape.
All right, that wraps it up for our Q&A and webinar. We want to thank you sincerely for your time. And as always, please don't hesitate to reach out to any of us. With that said, we all wish you a good night.